Shares in Chinese companies that mine and sell rare earths have risen after Beijing threatened retaliatory tariff action against the US. China currently dominates the global supply of rare earths, a group of 17 metals with a number of uses in high-tech applications, including magnets, cell phones, laptops, electric cars, rechargeable batteries, catalytic converters, and instrument displays. To give an example, a single iPhone contains 8 different rare earths, including neodymium and dysprosium. These minerals also have military uses, such as radars, night vision goggles, and certain types of explosive devices. Found in the periodic table, they are called rare because they are difficult and expensive to mine and process, although they are not actually rare as such. On the news, shares in the CSI 300 listed company, China Northern Rare Earth Group High-Tech, rose 8%. Another rare earth provider, China Minmetals Rare Earth, rose 9%. And following a visit from President Xi Jinping, shares in JL Mag Rare Earth, a rare earth magnets firm in Guangzhou, rose 150%. The official newspaper of the Communist Party of China warned that Beijing could soon stop exporting rare earths to the US. The threat came ahead of an increase in US tariffs on $200 billion worth of Chinese goods, which came into effect over the weekend. In 2018, China mined 70% of these rare earth minerals, leading some analysts to question what the impact would be on US industries that are reliant on them. The amount of damage that China banning exports of rare earths to the US could do may be limited, however, as the US is not a big maker of technology products, whereas China is a big exporter of finished technology products. Restricting exports of goods containing rare earths could hurt China as much, if not more than the US. John LaForge, head of real asset strategy at Wells Fargo Investment Institute, commented in a research note that "We have a hard time seeing how China could slap rare earth restrictions on consumer goods, goods that are produced inside China and are increasingly consumed globally, and not shoot itself in the economic foot in the process." According to an official from the Chinese Society of Rare Earths, a complete ban on rare earth exports to the US would not be practical, as US companies would be able to get these materials from other countries such as Malaysia and Japan, albeit at a much higher cost. In a conference call to Bank of America Merrill Lynch, the official noted that 80% of US demand for processed rare earths is for lanthanum and cerium, both of which are oversupplied around the world. It is worth noting also that China's past attempts to limit rare earth supplies have not been very successful. When Beijing cut shipments of these materials in 2010, prices increased, creating an incentive for other countries to increase production. The move also destroyed demand and led manufacturers to find ways to use fewer rare earth minerals in their products.